Good evening, guys. Ken at Tortoise Capital with the Nightly Strategy Podcast for October 29th, 2020. Thanks for your patience. So let's take a look at what we had today. Yesterday, we'd made a new 10-day low. It gapped fractionally up, sold off, made a new 10-day low, but didn't get to Z2. Then recovered up to the RL10, and then came back to settle on Z-1 at 330 and some change. Let's take a look at the 10-day range from 351-ish near the RL10 peak all the way down here, and that's about 7.4% travel time. It's finding support here between the belly of the dragon and the belly of the RL10, where we would expect it to find support. The last time it sold off from this height, it went that far. That's the same move. That's the same move that we mapped out earlier this week. So the next move was this. So that's what the upside could look like. At the same time, we have what I would consider to be a critical state here at the 10-day low, very near the 30-day low. Just a few more days to the election. Could this be a big sell-off through here? Yeah, stranger things have happened. So we would call this a critical state, defined as a larger than normal probability of a larger than normal move in a shorter than average period of time in either direction is believable. So that's the definition of volatility. The least likely probability would be a sideways grind. If we saw that, this is what I think the yellow zone would look like. I would say between Z1 and Z2 that it's got to give above 330 for us to have any directionality. You could argue that it's got to get through this 2-day high. I wouldn't fight you on that. You know, you could say it includes that, and then has to break through that gap, or you might say the yellow zone extends all the way up to the skin of the dragon. You know, you might say that whole area is yellow zone, and that everything inside there is noise. But at some point, that would be tradable right there on a return to the southern skin of the dragon. That would look like, and the dogs agree, that would look like this first move back to the Bollinger Band mean, and that's tradable. There must be coyotes outside. That's what it normally takes to get them that agitated this late. That'll make tonight's walk interesting. So let's take a look at some other elements here. We have the hump of the dragon. Here's the RLXD. Summer rolled over, became fall. We're still in the fall with the RL10. There's a considerable distance back to the baby dragon, which is by the skin of the dragon here and the Bollinger Band mean. The RL30 extension is clearly down. The PSAR is accelerating on the downward side, but this is tomorrow's PSAR. So it really takes a move above 346.5 or the Z1 to really make us think that downward move is over. So there's almost an argument that you could say the yellow zone really extends all the way up in here. But to me, this is where I would be picking up the intraday directional move to take advantage of this positivity here. Otherwise, it's really tactical in 1-minute charts inside here, but if it breaks above or below that yellow zone, then I'd be looking at hourly charts and trying to add to positions going in that direction. We're right at about almost a 9% sell-off here from the previous all-time high. This is what a 5% sell-off price level would be. This would be a recovery if we got that far. And this is what that true 10% sell-off looks like. So we're right at the edge of what would be a correction and a collapse. So this is peak uncertainty, and that really in hybrid trading terms, that just means, hey, trade intraday. What's your hurry? Times will change when it's time. All right, let's take a look at some of those intraday or those daily moves on the sector charts here. Here's the S&P at plus 1%. The Russell at 1.2. We had diamonds slightly underperforming at 0.4. Treasuries gave back 1% and came under 160. So this was a tentatively upward move for the day. The sectors that did better, there's Brazil at 1.3, tech and materials at 1.6 and 2% respectively. There's oil exploration at 2.5, clean energy 2.9, energy sector broadly 3%. There's the FANGs, that's Facebook, Amazon, Apple, Netflix, and Google at 3.25, Google 3.33, and then the triple techs at 5%, and then the big winners in terms of companies, Twitter at 8, U.S. Steel at 5. These are all rebounds from previously oversold conditions, and it's all the tech leaders. That's people buying them on sale, and that's still the go-to trade. On the downside, the sectors that underperformed, emerging markets 1%, finance in Japan and consumer discretionary around 0.7 to 0.6. There's silver at minus 0.3, wheat and precious minus 0.45. The Ackman hedge fund minus 0.7, healthcare minus 0.8, treasuries 1%, Mexico 1.7, oil 2.7, and volatility giving back 7%. So broad-based buying on sale, which is what you would expect at a 10% correction in a bull market. That's the essence of the channeling. That's why there were a dozen symbols that fired on that yesterday at favorable reward to risk ratios. What that really set up for us was some intraday moves to exploit bird in the hand, worth two in the bush, no overnight risk, and just getting it done. Here's an example of some of those trades. Here is Tesla, and this is our kata number 2. So we have the sell-off here. Let's get that so you can see it. Sell-off. The winter crosses a baby dragon, turns into spring, makes the RLXD, the PSAR flips. So this could technically be a supported spring crossing. We waited because we were being conservative today. So here's one, swing low, swing high, swing low, but it's still in the summer and rolls up. So now when you get the RLXD, you have a low, a higher low, support from the PSAR flip, and a Z3 breakout. So you can either buy this at 4 when it crosses the VWAP or 5 when it breaks above Z3. In either case, your stop is about $1.50. So an entry at 5. Z3 excursion pulls back, doesn't even get through the dragon, resumes. That's kata 2 and a second entry. And then this moves all the way to the top. This is a nice sniper exit at the PSAR, Wu Wei exit on the manager here. Perfectly played. That gives you $6 or $8 on 400. So that's a 2% move to make that gain. Very orderly move all the way up. No overnight risk. Here is Twitter. So this was a supported spring crossing here. So you have winter crosses the baby dragon, RLXD, PSAR flip. Winter turns to spring. You buy it in that little elbow of the dragon. Your stop is the PSAR. You take the exit here when it comes back to the VWAP and make bank. You gave back about what you risked, and you make what you risked. So that's a 1 execution R. This could have been a stop and reverse. Didn't play that way because everything was up. So now we have a low on the winter. So there's your harsh winter move. Crosses the baby dragon. Winter turns to spring. Enters the dragon. Exits the dragon. PSAR flips. You buy it with about a 30-cent risk. This pullback does not take out the Wu Wei exit. you don't move the Wu-Wei exit up until here, and then it becomes either the sniper or the manager who doesn't get out till there. But I take the sniper because I got a second position when it crossed above the VWAP and broke above the Z3. So this rejected immediately, just working. Second position, maximum excursion, pulls back, RLXD. I just take everything at the sniper on this one and make bank. This is coyote trading. Then immediately, because they get bottom ticked as usual, it gives us a low, a higher low in the RL10, a second higher low, and then the RLXD. This is COTA 2. It got a quick excursion. I could have been quicker, but we made basically a scratch here. I could have been better in here, but I wanted to give it some room. So a series of pretty good, 3 really good trades properly executed in Twitter. This one is a grind in, I think this is CLF, yeah. Cliff Natural Resources. Stand by. So here we're going to see COTA number 2 at play once again. Let's see, we want the arrow. So we have that harsh winter sell-off. This could have been a supported spring crossing, and that would have worked and gotten you the same exit. I played COTA 2 instead, a low, a higher low, PSAR flip, RLXD, enter. Gave back, I feel like too much, but this was a fractional gain. Nearly bottom ticked. Makes the RLXD with the second higher low. So just re-enter right away in the routine way. It's running the Z3 rails all the way up. I should have been better and taken a 1, 2, 3, but I played the PSAR exit with the sniper to make bank. Bottom ticked again. So enter on the RLXD. This one rejects almost immediately. Take the fractional loss here. Bottom ticked, re-enter immediately. It does not hit the Wu-Wei exit. Tested it, but it, that's what rules are for. It recovered, pushing the Z3 all the way up. I should have been quicker with a 1, 2, 3 exit in here. Took the sniper, so that gets paid. Fractional loss. This one gets paid. Fractional gain. So those two probably net out, and then that one gives you some benefits and gains. I was only playing the long side today because everything seemed to be up in the stack, so I was not playing the short side because it felt like it was the wrong side of the market. All right, let's take a look at the daily report. We've already seen the market health check, so let's look at we are still bullish normal. We went away from oversold. We're now just below average on the 3-day low, or 3-day NDX, I should say. ADX has now gone up to 0.17 or 17.2. The risk C is still warning us against abnormal volatility moves to the downside, as you can see. However, this would be a logical place for it to find support at the 10% sell-off. That's what it's trying to do, and then this would roll over and then become a possible move to the upside in the same way that this one did, being mindful it doesn't always follow through. So we're balancing on a knife edge right there. Still some good overreactions and a couple of channelings that are favorable. The men pains are the ones that have lost the least compared to the 10-day low. Max pains have the greatest percent loss from the 10-day high, I should say. This is the minimum loss from the 10-day high. Let me get that straight. So you got Monsanto, Intel, Conoco, in the max pain, so energy is still reflected in the losses. Tons of auto framers, a couple harsh sell-offs in Intel and Johnson & Johnson making new lows, and Walgreens also suffering in here off 3% for the day, as did, and Salesforce was down. Nothing broke out to the upside, obviously. But tons of channelings and overreactions. 551Ws typical on an up day like today, but still a good number of 5 days down. These would be the ones to prioritize on further breakdowns. And then the 551Ws would be the ones to prioritize on the way up. And then, as you can see, there's some 6-to-1s and an 18-to-1 in Intel in terms of the auto framers. So lots of good longer-term swings there. I would still only be swinging these 1 day at a time until we get through the election, however. Channeling and overreactions galore in the ETFs. Tons of auto framers and 551Ws in good shape there. Oil and energy continues to suffer. I'm liking the Dow on the long side here, and materials too had a nice day. So I'd be looking at follow through on Cliff, U.S. Steel, maybe Alcoa in sympathy. All the auto framers you could ever want, including some amazing ones at better than 4-1. This is all your framing data over here if you're setting up the mechanical trades. Daily squeezes, we had such a large range today that only Boeing and Intel offer better than 2-1 on routine moves. This is the trade where you enter on a breakout above the day's high with a daily range box as your trailing stop. And then if it moves just the range stat, then you're going to get 2.5 or 2.3-1 of return. So that's how tightly these were compressed. Mostly being dominated by fall and winter in the MACD histogram. So this is definitely times to be cautious on the long side. But notice the ones that are in the summer, they're the ones that have held off the best. So McDonald's, Goldman, and Travelers. And then Microsoft and Salesforce have made the turn early, moving from winter into the spring. So a couple to take a look at there. Still a handful broke down, made new lows on the 3-day and 10-day NDX in both the ETFs and the Dow. The big winners, Travelers, and then Treasuries reversed its gains with some profit taking, I think, today. Otherwise, not much to choose from. Still intraday and tactical. We're halfway back up the stack on volatility, so that's not giving any clear signals. And the slope stat is so close to the long-term average that it's not given a directional signal at all. This rollover now means, though, it could very easily give an upside leg, second leg up, or it could easily reverse and go a leg downward, in which case it would test this low area right here, and that would be another loss of up to 5% were that to happen. So perfect critical state is in play here. The 90 in the red, you can see that 90 slope stat is coming finally back to normal. The 30 has had a nice run up and is rolling over, and the 10-day slope stat is at a bottom peak, peak to the downside. So this is a natural place for it to find support. The last time it was here, it did that. And it did that. And so when it finds support down here at the edge of the river, it's not unusual to see these kinds of upside moves. So that's what's baked into the cake. Critical state, large move in either direction is certainly possible. And that's everything I want to cover for tonight. We'll get this published and posted in the usual way. We'll see you in the chat room ready to rock tomorrow. Take good care.